What's going on, guys? Randy back again here with Trade of the Week. I believe this is episode 17. So we are getting there. Okay, guys. So this episode is actually going to be very, very special. So just make sure to stick until the end of the video because I'm really going to be dropping gems on this episode, guys. Like you really, really, really need to be here. All right. So trade of the week for me this week was on gold. All right. Gold did something really, really interesting. If I start from the daily time frame, we can see that we were around this area right here. Okay, this area here is an area where market actually is failing to break above. Okay, so when I did that on the daily, I went to the H4 time frame to try to see what was going on. Okay, so I saw that here we had like a buy side liquidity and then price dropped. Okay, price dropped, and obviously look at here, we're making higher high, higher low, higher high, higher low, higher high, higher low, higher high, failed to break that high, and then market started to drop. Okay, it dropped all the way down to this level right here. Okay, so beginning of this week, I was actually like a lot of people were bullish, of which I was bullish as well on gold. I think I took like two buy position on gold this week, but I saw the zone as a potential point of sabotage. Okay, the point of sabotage is basically an area where market can decide to break or to U-turn, and the point of sabotage is also a point of interest. Okay, so I marked that zone like that. Okay, so and then I was buying gold. Like trust me, I was buying gold, and I was expecting gold to actually get to this around this zone here. Okay, I was actually aiming for this top, but I just kept the zone in mind as well. Okay, so gold got to the zone. All right, let's go down in time frame to try to see what was there. Okay, so that if you want, you can actually evolve that H4 auto block to a 1 hour auto block. Okay, just to make that zone very, very small. Okay, so the zone was evolved. And look at how market approached the zone. Okay, we're making higher high, higher low, higher high, higher low, higher high, higher low, equal high. Okay, so this was an equal high. So this is already a signal for that the market is actually failing to break the zone. Okay, buyers actually try to breach, but they just stop here and then price close like that. Okay, so now let's go to the M15 to try to see what was the potential entry. Okay, so here it's very, very, very nice. Okay, so I didn't enter here. Okay, so price went down, went up like that, and it fell like that. Okay, so what I did is I placed the fib from the high to the low. Okay, and I went to the M5 time frame to try to see if there was a clear entry. Okay, clear entry confirmation. Let's see. Okay, so I know M1, I mean M5. Well, there's not really like a clear one. Like, well, there actually is one. Actually is one. Sorry, there's a higher high right there, higher low, higher high, higher low, higher high, and then market breach. Okay, we had a break of structure right there. Okay, we had a break of structure right there. You could have entered like I could have entered at the break at this candle right there. Okay, and then I placed my stop loss above there. Okay, so now these days I'm only taking one entry confirmation, and I'm going to touch on that in the mentorship. Okay, so this is actually a very good entry, but I actually entered like this. I waited for that pullback. Okay, and then that's where I entered. But I mean, it's the same thing. Like you would have entered here, or you would have also just entered at like you see my favorite entry, but of which I'm not going to disclose here. This is only something that I'll be teaching in the mentorship. Okay, but nonetheless, it's the same type of entry. Okay, and then what was the stop loss? Okay, the stop was 33 pips. Okay, and remember entry. I mean target. Target is always from the point low. Place the Fibonacci point low to your point high. All right. And then your target is the 100% zone. Okay, so that's the entry right there. From here all the way down here, what is that? That's 227 pips. Okay, so now here's where it gets interesting. Okay, this is why I say that this episode is actually quite different. This is where it gets interesting. So remember, funded accounts, okay? Funded account. This is my funded index, okay? So if you buy an evaluation from them, right? They want you to have on phase one, they want you to have a profit target of 8%. All right. And phase two, they want you to have a profit target of 5%. Okay. So just remember that. Okay. So now we're going to go back to the trade and I'll explain to you how you can actually pass this in just one trade. Okay. So now say you buy, okay, say you're starting, okay, and you just bought a $5,000 evaluation. Okay, a $5,000 evaluation goes for $50. Okay, that's if you pass it, you get a $5,000 account. Okay, so say you bought you had your $50 and you bought the $5,000 evaluation. Okay, so with the $5,000 evaluation, I'll actually ask you to risk not more than 1% per trade. Okay, not more than 1% per trade. If you are consistent but you don't see a lot of winners, like it's advised you to like only risk 0.5%. But if you are consistent and you see like win on a week to week basis, you can risk 0.5%, so 0.5%. Okay. But if you are like, you know what you're doing, okay, you can risk 1%. Okay, so let's start with like someone who's not as consistent, okay, but then they spot a setup like this, okay, and they were risking 0. Um 0.5%. Okay, so 0.5% is actually 0.5% of a $5,000 is actually $25. Okay, so your entry was right here. Okay, your stop loss is 27 pips. Okay, so you take 25, okay, divided by 27. Okay, it gives you 0.9. All right, so what is 0.9? 0.9 is actually the lot size that you are going to use. Okay, so 0.5, you place you place the dots to the left. Okay, one decimal to the left, and that gives you a lot size of 0.09. Okay, 0.09 simply means that you will be making 90 cents a pip. Okay, so 90 cents a pip, right? So 90 cents a pip, and then your target was 257 pips. Okay, 200 I mean 0.9, so that's 90 cents, right? Times 257. Okay, so your profit would have been $239. Okay, this is for someone who's risking 0.5%. Okay, guys, so for someone risking 0.5%, this is what they would have made. So going back to this, okay, going back here, okay, so phase one, they want you to make 4%. 237% is already 5%. Okay, it's already 5%. So that means with this one trade, you've almost reached target. Okay, you probably need just one more trade. Not even like this. You probably need like a a 1 to 3 risk to reward trade for you to pass phase one. Okay, so but if this was phase two, you would have passed this trade in just one trade. I mean this challenge in just one trade. Okay, because remember, like on the second phase, on phase two, they want you to actually make a profit target of 5%. All right. So now let's go to the second example of someone who is actually seeing kind of like more wins and like same win and same losses. Okay, so same win and same losses. This is someone who's going to be risking this is someone who's going to be risking 1%. Okay, 1% of the account. Okay, so your entry is here. Okay, and then that's your stop loss, 27 pip. Okay, so 1% of $5,000 is $50, right? So $50 divided by 27, right? That gives you 1.8. Okay, you put the comma to the left, you take the comma to the left, it's what? 0.18. So 0.18 is your lot, it will be your lot size. So you come here and you type in 0.18. Okay, that's your lot size for the trade, right? So 0.18 simply means that you are making is it $18 a pip? Yeah, $18 a pip, right? So $18, you're risking $50, okay? Then you're making $80 a pip, okay? So now you times that by your profit target, which is 255, okay? 255 pips. That's $472. So that's like 9%, okay? Almost 10%. So phase one, you're risking 1%. And then on that one trade alone, you've made what? You've made 8%. So phase one passed. And you don't even like for the phase two, you don't even need to catch a trade like this in order for you to pass. You can tell yourself, okay, maybe I want to hit this target like 2 or 3 trades, and then you pass. Okay. So this is just what I wanted to share with you guys. Like it does not take a lot of time for you to actually pass this challenge. It's like you see, you can pass it in 1 trade, you can pass it in 2 trades, you can pass it in 3 trades. It just depends on your consistency and how well you actually know the market. And this brings me to say that you need to spend a lot of times in the chart. You actually need to back test. You need to look at all these you need to look at what the market is doing, and you need to specify one type of setups. Okay, so you don't need to be trading everything. Just pick 1 or 2 setups that you trade consistently, and you are going to be passing this challenge like a piece of cake and making money. And like I told you guys, like if you take the funded route, you can start making huge amounts of money in a short period of time. You just need to put in a little bit of work, see a little bit of consistency, and then start taking these challenges and start to get funded, guys. And as you can notice, guys, I've actually deleted the Discord server. It's because like a lot of people were not participating. Like no one was really saying anything, so I just decided to delete it. And I will come back, but I'm gonna come back. Before I come back, I'm actually gonna show you results, like the type of withdrawals that I make. That way, you see that it's not a joke. Because like I feel like people want to see money. I don't know why. It's like a human nature thing. Like people just want to see money in order for them to believe that this trading thing works. But if you're posting analysis and you're giving them signals, they feel like, man, this is just analysis. They actually want to see the money. Okay, I was like, okay, well, then I'm going to show you what I make. And I'll show you what I make. But then when I open the server, it's going to be a paid service. It's not going to be for free anymore. Because I feel like also when you do things for free, people actually take it for granted. So I'm very generous. Like I know new people know it. Like I've given a lot of courses for free. I've given a lot of mentorship for free. But this time it's actually going to be different. I'm going to show you the amount of money I make. And then the Discord, when I reopen the Discord, it's not going to be free. It's going to be a paid community. And if you want to join, you join. If you don't want to join, it's up to you. So with that said, guys, I'm actually going to leave the link to my Discord, but it's not a group. Like you could send me a message directly on Discord if you would like, if you would like help, or if you'd like mentorship, you want me to help you on how to trade. And yeah, and we can set up a date, and you can make the payments, and then we can just take it from there. All right, guys, so enjoy your weekend. Make sure to back test this weekend. Make sure to get ready for next week. I mean, there are trades every day. Like I've actually transitioned from a swing trader to a day trader now. I take like 1 to 2 trades per day, and I'm done. And it's really enough for me. And like it's really, 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 really enough for me. Like being a day trader is actually it actually elevated my trading to another level. So guys, do not forget to like and subscribe. And I will talk to you next week on episode 18. Cheers.